All right. Hey, everybody. Jeremy here. I'm going to keep this week for Sunday, October 8th, very short for the week ahead. I am actually on vacation in Portugal. So let's just dive straight on in. Actually, let's start with news coming up. So looking at the week ahead, we got core PPI data on Wednesday that's going to be important. CPI data on Thursday, along with unemployment claims and consumer sentiment on Friday. So those are kind of the three big ones this week we need to be paying attention to. And it kind of feels like some bad news might be good news again in the market. So it'll be interesting to see how the market reacts to these numbers. If we do end up getting a little bit of bad news, the market might price that in, thinking that the Federal Reserve will cut interest rates and or at least not do any more, because right now it is thought that they are going to have one more rate increase before the end of the year. So they might celebrate that a little bit in the market if we do get a little bad economic data, because it would support a more dovish Fed. So anyways, diving into the week ahead here, looking at the major indexes, we're on the S&P futures right now. We were super overextended by pretty much all metrics here. It's very rare that you have this many down days in a row on the S&P 500, not even just sniffing the 9 EMA here. We did get some buyback on Friday, closed above. Any rally right now needs to be looked at as suspect. Right now, any rally basically back up into the decreasing at 20 period moving average makes some sense, kind of coming into the zone that we have over here to the left of the last major pivot there. Wouldn't surprise me to see us come back up, touch that, and then roll back over and retest this 9 EMA, looking to see if we can actually form up support on top of it instead of being underneath it. If we go out and look at the weekly chart here, you can kind of see what I mean. We got back down, got below all the moving averages here on the short term. We did have a nice hammer candle showing slowing momentum. Didn't quite get to that 4,200 level that we looked at as kind of the previous supports. We stopped a little bit short of that. On the weekly chart, it wouldn't surprise me to see, like I said, a little bit more of a pop and then come back down and retest these lows and give kind of an extended bottoming pattern here, probably over the next week or so. If we can maintain above this 4230 level, the 200-day moving average on the daily chart, and just kind of get some sideways chop or some up and then back down and back up again, staying within this range here, anywhere from about the support of 2233 and up to basically this decreasing 20 period moving average at 4,400. So that's going to be kind of the neutral range we are watching. If we break below that, that is not good. And if we do get back above that, you'd have to try to probably fade the rally, expecting that we were going to come back down and test this zone. To be really bullish, we need to see this form up a little bit, and we need to see more support than just one touch off of the moving average down here. So if you are wanting to look for bullish opportunities, patience plays. Let this work out. Let this give us an actual bottoming pattern. If it V-shapes, so be it. We miss it. But we want to make sure that we are looking at it through the lens of a longer term perspective, because one touch does not really form up support. Going out to the NASDAQ real quick. The NASDAQ actually looks quite a bit better. It actually didn't break down nearly as much. This big M for murder pattern, we didn't actually break that neckline in tech. And it is actually rallying. So if we get back up above and close back above this 50 period moving average, that would be a really, really good sign on the tech sector. And we know from experience over the last few years that the tech area of the market usually leads the rest of the market. So if tech firms up and gets a little bit of a sideways trend here and then a breakout, that should help pull the rest of the market up. So that would be a very, very good sign. Going out to the Russell 2000, Russell 2000 just got killed. The small caps always just get murdered when chaos comes into the market. It did bounce off of support. Same read here as the S&P. We need a few days of sideways action. Let these shorter term moving averages come down and converge down here around the 1800 mark. And then a break above that could potentially be playable. And going out to the Dow Jones, nothing really to see here. We did break our diagonal support. We broke underneath the 50 period moving average. This is on a weekly chart. If we toss this into a daily, it has some work cut out for it. It looks like it's going to try to pop up and touch this 200 period moving average. And my guess is either pull back from there or go sideways a little bit. If it does consolidate and go sideways for 2 or 3 days, come like Thursday or Friday, there might be a good breakout opportunity here, but it needs a little bit of work as well. Going into gold real quick, I'm just going to touch on a couple more here. Gold is very interesting to me here. I have a thesis for gold long term. So anything on gold when it comes down and touches the 200 period moving average, if we get a little bit of sideways action here, consolidation, and then break back higher again, that would be great. Or if you want to just do a quick trade on this, it is really overextended on the RSI. MACD is slowing, showing momentum to the downside. We did get several kind of slowing momentum candles here in a row, and then a close back above the range of basically all three of them. So that is really nice. We do want to see it get back above the 9 EMA, but there might be a short-term opportunity playing the counter rally here on gold. Silver, pretty much same thing. Very similar read. Might have an opportunity to day trade something on the silver futures here as it counter trend trades back up into resistance around 2250. But that would have to be a day trade. Right now, there is too much chaos in the market to hold that overnight. And finally, let's go out to Bitcoin, and then we'll end on crude light. Bitcoin is super interesting to me now. This is actually the first time that I've been intrigued by Bitcoin for quite a while. And if we toss that onto the weekly chart, you can see a little bit more what I'm talking about here. Just in the last few days, we've reclaimed the moving averages going in Thursday, Friday of last week. And we have the high from this candle at 28,335. So anything above 28,335 with a close above that signals more pressure to the upside. Easy target would be coming back up to probably 31 or 32. And beyond that, actually, we might have an opportunity to play this back up to 35 to 40. So there's a potential for a really good move here if we can get some momentum. It's not overextended on the RSI. The MACD has just turned or is just about to turn positive again, and we have seen a little bit of buying action come back in on the weekly chart. We can double check that on the daily chart here. On Friday was pretty much all buying action, so pressure to the upside. MACD looks good, RSI looks good. So I really like a close above that 28,335 pivot level. That looks really good to me and looks actionable to me right now. We also have short-term break of this diagonal resistance that has been consolidating underneath the 50 period moving average, and now we've gotten above that and tested that several times. So we have held that line as support now, which is really good, and it is converging on the 9 EMA, which is rising as well. So I actually kind of like the setup here in Bitcoin. Hopefully it cooperates with us. And for anyone that plays the futures or plays proxy stocks like Mara or Riot, or Bitto, things like that. Hopefully it hangs out for the rest of the day today and gives us an opportunity on it tomorrow when the stock market opens so we can play that. And finally, let's go out to crude light. Crude light had been on a monstrous tear and just got destroyed. And this was basically off of news of people anticipating a higher probability of recession. And with the higher probability of recession comes lower demand for oil. People don't travel as much. They don't vacation as much. They don't buy as many goods that have to get shipped places. So inventory stocks kind of slow down. So anyways, just got absolutely obliterated on that. There's not really a trade here. It's underneath its 50 period moving average on the daily, which is not a good look. And also broke its 9 period moving average for the first time in quite a long time with a close below it. We did test below it on the last pivot, but this one cleanly closed below it. Got support down at 80. And on the daily chart, let's see. Yeah, we kind of are at kind of a sloppy support zone down here, but the real support doesn't really come in until around 80. So anyways, we need to see some cleanup here. Ideally, we would see this kind of do one of these things and have this 50 period moving average converge on the high points of this little double bottom and then looking for a breakout of that line around 85. So we could see a breakout from there, but this needs a little bit of time to clean up before that. Hope that helps, guys. Going to keep it short and simple today. If you have any questions, as always, let me know.